and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, both Shruti Mishra and Ritu Singh. And here's wishing all of our viewers a very happy Dhanteras. These are the top headlines from the startup world. Ola Electric launches another festive sale as stock dips below IPO price ahead of Diwali. 72 hours rush offer featuring discounts of up to 25,000 rupees on EV scooter makers' S1 portfolio as part of its biggest Ola season sale campaign, which runs until the 31st of October 2024. Karnataka government launches two flagship programs, Elevate 2024 and Karnataka Acceleration Network for Startups, offers grants of up to 50 lakh rupees for early stage startups and mentorship, market access and funding opportunities for growth startups. Apple exports nearly $6 billion worth of India-made iPhones between April and September 2024, say reports. Exports jumped by a third in 6 months. As per a report by Bloomberg, Apple's annual exports from India are on track to exceed $10 billion. PUBG publisher Krafton's India arm partners with South Korea-based IIM Investment to become the anchor investor in IIM's Made in India fund, focused on growth stage companies with a strong road to IPO. Jaipur-based MSME financier Finova Capital bags $135 million in a Series E round from Avtar Venture Capital, Sofina and Madison India Capital, with existing investor Norwest Venture Partners also participating in the round. Vriddhi Home Finance raises 310 crore rupees in Series B funding led by Norwest Venture Partners with participation from existing investors, Elevation and the company's founders. AI automation platform Evolute IQ bags $20 million in equity and debt led by Round 2 Capital with participation from Nordia Growth Fund, DCAP Select and PH Ventures. Our top story today, in a bid to give a boost to India's startup ecosystem, the Karnataka government today launched two programs targeted at supporting startups across the state. Now, the programs include Seed Fund Scheme Elevate 2024 and the Karnataka Acceleration Network, which will promote growth stage startups outside of Bengaluru. Ritu Singh joins us now with all of the highlights. Ritu?
Well, the government of Karnataka today launched two flagship programs, Elevate 2024 and the Karnataka Acceleration Network, or KAN for short. Now, Elevate 2024 is a grant-aid seed fund scheme designed to empower early-stage startups in the state. It provides grants of up to 50 lakh rupees per startup, along with support like incubation, expert mentorship, incentives, and access to venture capital networks. The scheme is also a gateway for availing various benefits under the Karnataka startup policy, like incentive reimbursements for patent costs, marketing costs, GST, and so on. Now, so far, 983 startups have benefited from the Elevate program with a committed grant of 224.6 crores since its inception in 2016. Now, the Karnataka Acceleration Network, on the other hand, is a network which provides mentorship, market access and funding opportunities for growth stage startups across the state of Karnataka, but with a focus on regions beyond Bengaluru. Now, the state estimates that a total of 302 startups are likely to benefit from this over 6 cohorts in a period of 3 years. The mentor accelerators that have been identified from Bengaluru are the Derby Foundation, GenServe and Gen Launchpad, while mentee incubators from the clusters include Shine Foundation from Mangalore, UAS from Dharwad and so on. Now, both of these programs are intended to support entrepreneurship across Karnataka and make the state a leading hub for innovation. Well, what a day it is to talk about wealth, and you have edu-wealth startup Zinc Money, which has raised $25.5 million in its seed round led by Nexus Venture Partners. Now, its core mission is to help families build what it calls edu-wealth, which is a financial foundation tailored specifically to meet the rising cost of overseas education. It plans to use the capital to secure key financial licenses, expand product development, and launch custom investment solutions for Indian families. For more on this fundraise and the company's growth roadmap, joining me now is Prashant Ranganathan, the founder and CEO of Zinc Money. Prashant, congratulations on raising this large seed round. But before we get to that funding itself, tell us briefly about Zinc. edu-wealth is quite the unique term. What are you solving for, and how large is this opportunity?
Great to be here. Thanks for having me, Ritu. And it's a great pleasure to introduce the company to the world. edu-wealth actually is a new space. And I think it's very exciting because this is a time where India is reaping its demographic dividend, if you may. We have a very young and aspiring population. And at the core of it, a lot of us want the best education for our children. But unfortunately, a lot of us are not well planned. And if you ask the parent population, a lot of them are very anxious about the child's future, especially when it comes to higher education. So our objective is quite simple. We want to help on every step of the journey. We want to help the parent from a financial standpoint, but we also want to help the child kind of find the best university outcome for themselves. So start early, find the child, put them on the right path to the end destination, but along the same time, help the parent save in the right currency and in the right kind of corpus to make sure that they actually are well planned and well situated when the child ultimately does get admitted to the university of their liking. So the space is new. The space is very large. We often quote the 1 or 1.5 million Indians who go study abroad every year. But I think that's less of the interesting market. The more interesting market is the one that doesn't get to go, that often plans to, but doesn't quite get there. And my ambition and the mission of the company is to help them not just get there from a planning from the student standpoint, but also planning for the parent to be able to save and create the corpus so they can afford it.
How exactly do you plan to deploy this $25.5 million, and what are the various licenses that you're seeking? The timeline as well for those, and how will this aid your growth going ahead?
Yeah, we're very excited to be building for India out of Gift City. We have an approval in principle for a payment service provider license, which allows us to offer the core banking capabilities along with a banking partner. We will also look to strengthen this with a brokerage license as well as a NBFC license. So these are all dollar businesses built out of Gift City in Gandhinagar. And a lot of the capital will be deployed in operationalizing these licenses. But at the same time, we're also building a very large AI-powered counseling network across the country, which we'll be rolling out in the next month. So starting at the grassroots, helping counselors, powering them with AI so that they can deliver the best in-class information to the student body at large, and preparing both the student as well as the parent. While we have the financial solutions for the parents in Gift City, we also want to spend a lot of our effort in building the AI and the technology to help bring the right counseling to the child at the right age.
Well, you know, a large number of Indian families do have to rely on loans for education. Here, what are some of the specific tools that you're offering to help families save or invest instead of relying on borrowing?
Yeah, so often what's misleading is parents look only at the return that a certain fund promotes, but it's about getting to the right risk-adjusted return. So if the ultimate spend is going to be in dollars or euros or the British pound, then you want to effectively be in that currency, or at least in the reserve currency, and you want to beat inflation in that currency. So you don't want to take too much risk, given that this is for your child's corpus. You want to take the right level of risk, and you want to optimize for the right yield within that risk parameter. So what we have done is we have engaged with a global expert capital markets license holder to create this fund, experts who have done this for HNIs and ultra HNIs, but for the first time are building it for the mass affluent segment. So that's actually quite exciting. The exact makeup of the fund itself is perhaps less interesting, but the fact that this is what the HNIs and the ultra HNIs always had access to, and the fact that we're able to bring it to the mass affluent is what's more exciting.
All right, so finally, what kind of growth do you foresee for Zinc in the EduWealth space, say, over the next 5 years or so? How many clients do you hope to add, and what kind of revenues do you think you'll be able to generate?
Yeah, so I'll look to serve a few 100,000 of us. I think the revenues we'll come back to at a later point, but I think a few 100,000 customers served deeply and really well, impacting the life of a few million Indians over time. Has a few billion impacted over generations. So that's the aspiration. The revenue, I think, will follow. I don't have a very clear answer for you on that one.
Okay, Prashant, that's all the time we had. Thank you very much for joining us here, and we wish you a very happy festive season.
Thank you very much.
Mihup, a conversation intelligence platform, has raised 50 crore rupees in a fresh round of funding. The round was led by public market investor Ashish Kacholia with participation from the family office of ace investor Madhusudan Kela. Joining me now to discuss this further is Tapan Burman, the co-founder and CEO of Mihup. Tapan, thank you so much for taking time out and being here with us on Startup Street. You know, first of all, Mihup is a conversation intelligence platform that's designed for diverse applications across industries, right? If you could, sort of break that down for us and tell us what it is that you have on offer and what's the gap that you are trying to solve for.
Sure. Thank you so much for inviting me, and happy Diwali, first of all.
Happy Diwali to you as well.
Yeah. So let me start with that. So Mihup stands for May I Help You Please. So that's the acronym of the company. And we believe Mihup is the operating system for every human-machine interactions, what happens in the world. So we are a horizontal platform for multiple applications. So on the top of the platform, we have applications for the automotive to simplify human-machine interactions, and also to automate contact center operations for bank and financial services. Now, if you have to talk about the use case in the automotive, it's like an Alexa inside the car. So we can literally control vehicles just by talking naturally. That's what it does in the vehicle itself. And in the contact center, it's basically going to automate all the manual operations and analyze all the interactions, what happened between agent and customer, and hence help companies to be efficient 30-40%. So that's the product line what we have Mihup so far.
Right. So you've broken down exactly what it does in terms of use cases. So it's made it easier for us to understand. But if you could take us through the kind of demand you've witnessed and the kind of clients you're servicing at this point, and what's the tech edge that you have?
I think, the demand is pretty huge, and we see we have been witnessing significant growth for the last 24 months. We are growing 100% year on year for the last 24 months. And literally, I think it's a need of the hour for all the banks and the automotive to have this kind of applications in their either in the bank or the automotive. So demand is there, and so that's the kind of demand what we see in the market right now.
All right, so big demand there that you're seeing, and 100% year-on-year growth is what you've witnessed over the last 24 months. Now, with this fundraise, right, you hope to use it to sort of scale your operations and scale your product offerings. If you could elaborate on your fund allocation plan and the new products that you hope to launch in the future.
So primarily, our intent is to deploy this fund to strengthen R&D. So we are going to add more language capabilities in the platform itself. And second, of course, to scale up the revenue further, not just in India, but outside of India as well. So we are not thinking of having more applications on the top of the platform. We'll continue to scale with the current product lines what we have right now in India and outside of India as well.
Right. So inside and outside of India is what you said. So if you could tell us what are the locations you're looking outside of India? What's the global expansion plan?
So currently we are expanding to US. So that's our primary target market, what we're going to sort of attack. And other than the India, and post US, of course, Southeast Asia, Middle East is something we will look at. But US is something we are looking at very, very seriously and deeply, seriously and deeply as well.
Right. So you hope US will be that next big market for you. If you could take us through your current revenue story, what are you clocking? Where do you hope to finish this year? And, what's the sort of revenue mix you hope to have, with US and Middle East becoming other markets of yours?
So currently, I think, we are close to about $4-5 million of ARR, what we are clocking right now. And we have target to reach $10-15 million revenue in the next 24 months. So that's 80% of the contribution will come from the domestic market, and international market will contribute 20% because that is something we're going to start from the next year itself. So majority of the revenue we are considering will come from India itself.
So majority of the revenue in India, but you're hoping to see about 20% from, the other markets that you enter, right? You're also eyeing an IPO soon, right? If you could take us through how soon you hope to apply for an IPO and, your DRHP, and where do you want the company to be before you sort of do this?
So currently we are, of course, working on the IPO roadmap, and we are detailing out, and we have a plan to hit the market in next 18 months. That's the IPO roadmap, what we are thinking right now. And before hitting the public market, we wish to at least be 200 CR of revenue is something top line. With that number, we want to hit IPO. So that is something we are still working and doing the road mapping.
Right. And how soon do you hope to hit that 200 crore rupee mark?
I think within 24 months, we'll hit 200 crore for sure.
All right. So within 24 months is the hope that you have. All right, Tapan, thank you so much for taking time out and being here with us on Startup Street. And here's wishing you a very happy Diwali, happy Dhanteras, and we wish you all the best.
Thank you so much. Thank you so much.
On that note, it is time for us to head into a short break. On the other side, Even Healthcare has backed $30 million in a Series A funding round, bringing its total funding to $50 million till date. We put the firm's founder on the hot seat to decode their fund allocation plan. Stay tuned for that.
Welcome back to Startup Street. Managed care provider Even Healthcare has raised $30 million in a Series A funding round led by Nexus Ventures with participation from Founders Fund, 8VC and Lackey Groom, among others. Now, this round brings the company's total funding to $50 million. To talk to us about Even Healthcare's growth plans, joining me now is its co-founder, Mayank Banerjee. Mayank, welcome to Startup Street. You claim that unlike India's traditional fee-for-service healthcare model, which often results in delayed treatment and financial hurdles for patients, Even Healthcare's model aligns health outcomes with profitability. Elaborate on this approach and talk to us about your business model.
For sure. First of all, Shruti, thank you so much for having us on. The goal with Even is very simple. How do we make healthcare in India proactive, affordable, and accessible? And I think that is the goal of our business model and indeed of our company as a whole. The way we do that is by investing in keeping our members healthy. It sounds very, very simple, but actually, if you think about it, a traditional healthcare provider that operates on a fee-for-service basis doesn't really have that incentive. If anything, the later the stage of care, invariably the more expensive it is, and therefore the higher margins that someone can create. We work in partnership with our insurance partners to find ways to cut down the cost of care and therefore improve the outcomes for the patient, save money for the insurer. And that is the core goal of what we're trying to build.
All right, Mayank, the more important question is, how are you ensuring quality treatment? And most importantly, how have you built customer trust?
Again, really good question. I think for customer trust, our job is to say what we will do, deliver on our promises, and leave it to the customers and our patients to decide if they trust us. I think when it comes to making sure the patient outcomes are as good as they can be, there are two approaches. We have what I believe are some of the best doctors in the country. We go out of our way to get them. And secondly, we make sure that when those doctors join Even, they also sign up to our set of clinical protocols that we are constantly evaluating, constantly improving, and making sure they always put the patient first.
Okay, all right. Mayank, you offer unlimited consultations across episodic care, lifestyle management, and chronic condition treatment. You also plan to open 3 secondary care-focused hospitals in Bengaluru. How does this move enable you to strengthen your vertically integrated payer plus provider model, and what is the kind of impact you hope to make?
So the long-term impact, as I said, is always about how do we make care proactive, affordable, and accessible. I think we already do, like you said, a huge amount of work on the preventative side through our in-house clinical team. Sometimes we realize that you can't prevent everything. And I think going deeper into the hospital side of things will allow us to have an impact on our patients' lives, even beyond the consultations that we do, the clinics that we run, and now into the surgeries that we hope to, when they do need to happen, despite all of our best efforts to prevent them, to make sure that we get the best patient outcomes, we have the lowest chances of you ever needing to be readmitted. And so it's really a fully integrated solution.
All right. Mayank, I believe the new capital will be used to launch hospital operations and scale patient care and recourse processes. Elaborate on each of these plans, the timelines and the targets you've set for yourself.
So our general rule is to under-promise and over-deliver, of course.
Okay.
But I think by the middle of next year, I would like to think we'll have at least one of our hospitals up and running and offering our members in Bangalore an amazing experience. I think at the end of the day, we are already covering nearly 3 lakh lives. We see no reason why we can't double or even triple that over the next 12 to 18 months.
All right, those are some ambitious targets there. Mayank, Even Healthcare has generated $28 million in revenue in just 1.5 years after inception in 2020. Take us through your revenue model. Are you making money per visit? And how competitively are your services priced? And what is your customer retention rate?
Yeah, so I think what's really important is we don't make money on a per visit basis. Our entire business model is to say, pay us up front for Even Care that gives you access to all of our doctors. And like you said, you can speak to them as many times as you want. Our job is to keep you healthy, keep you happy and renewing. So our consumer retention rate is over 90%, with 90% of customers choosing to renew for year 2, which we think is better than pretty much anything in the market and is on a par with Amazon Prime or Spotify. And on our business model, as I said, the healthier that we keep our members, the happier they are, the more they renew, the more they refer. And in the long run, we save money for insurers as well.
All right. Mayank, we've spoken about how Even Healthcare offers its members unlimited free consultations, diagnostic tests, and cashless hospitalization through its in-house clinical team. If you could take us through some of your partnerships. You touched upon this earlier, but who are your partner clinics and insurance partners?
Really good question. So again, the cashless hospitalization, as of now, is done entirely through our insurance partners.
Okay.
We are not an insurance company. We just happen to work with some of the most progressive, forward-thinking insurers who want to invest in the health of their customers. We have partner labs where we aren't operational, and we partner with a subset of all the labs in the country because, as I said, what we care about is the best thing for the patient. So even if a lab sometimes is a little bit more expensive, but we know provides better outcomes, we will invest in that. And as you mentioned, all of the clinical services that we offer are handled by us in-house.
All right. Mayank, on that note, I'll have to wrap up our conversation. Wish you the very best as you reimagine healthcare for India. Wish you a very happy Dhanteras as well.
Thank you so much, Rithi. Really appreciate it. Thank you for having us on.
With that, it's a wrap on this edition of Startup Street. Wish you all a very happy Dhanteras. From Ritu, Arundhati and me, Shruti, goodbye and many thanks for watching.